Good morning and welcome to Storent Holding Investor Webinar. Today our hosts are Andris Pavlovs, co-founder of Storent and chairman of the board of Storent Holding, and Baiba Onkel, CFO of Storent Holding. Andris and Baiba will present financial results for the first half of 2024, speak about the rental market forecast and perspective it gives to Storent, as well as share more information about the Noteholders voting. After the presentation, we will have a live Q&A session. If you would like to ask your question to the company, please use the Q&A box at the bottom of your screen. And now I'm handing over to the presenters.
Hello, it is nice to present again our company, our results to our partners, investors. We try to be, for us it's very important to communicate our results and communicate actually what we are doing, because we are trying to be transparent, we are trying to be open, and we considering our investors, people who putting money in our bonds as our partners, and we try to explain the situations, what we are doing in the company, why we are doing in the company. And for us, it is very important, this communication. And I would like to start very shortly and briefly about what we will explain you today, what we describe you today. Mainly our CFO, Baiba Onkele, will describe the situation and present situations and what we are doing and how we are doing. But in general, we are very happy with our results. Yes, we always want to reach a little bit more, let's say. We are always, let's say, expecting some results, I don't know, some 5% more than we are really reaching at this point of stage. But we are really very happy with the results, because we reach almost 20 million sales. We have EBITDA 4.4 million. Yes, we have losses. Later we will explain you why, and we will show you the positions which why we are generating for half of the year losses. But good thing that starting from the May, we already have positive EBITDA, and this is profit will grow significantly. Construction market, let's say it's in Baltic countries, it's from our understanding it's good. In Nordic, of course, it could be better, but we see significant improvements already in Finland, also in our results. And Sweden, we are, let's say, a very small company. That's why we are not so much to depends on a market, construction market situations. We are mainly depends on our, let's say, organization and structural problems which we have at the moment, but which we are changing already, and we see already positive trends to increasing our sales and results. And second points which we will also explain during these presentations will be about our covenants, about debt EBITDA. We will explain what is the benchmark in our industry for this net debt EBITDA, and actually we will try to be open and explain why we are increasing so significant amount of money right now, and what we're expecting to reach next year. Baiba will continue with more detailed informations, and probably we will present together. She will take leading positions. I will put some comments.
Okay, good morning, everyone. So first of all, a few Storent highlights about the company. So Storent is in the market for 16 years already, since 2008. And as Andris mentioned, last half year we generated almost 20 million sales, 4.4 million EBITDA, and we had losses of profit before tax, 1.2 million. In the Baltic, we are among the top 3 players in the market, and in the Baltic market, we own 11% of market share, and we are leader in digitalization and online sales. We have in 5 countries 28 rental depots. Our team is almost 250 people rich. And we operate with the rental fleet in value of 140 million, which most of it, that's our own fleet, and 25 million, it's the split fleet what we operate. And we are 100% Latvian capital company, and next to me is one of the owner. Andris owns 50%, and his partner and friend Ariesta owns another 50%. So about markets where Storent operates, we are in 5 countries. So Baltic countries generate around 70% of total sales. So in Latvia, we are in the leading position with the sales and also with the number of rental depots. We have 13 rental depots, and this year we also expanded in Kurzeme region, opened new rental depot in Saldus. So Estonia makes 10% of Storent total sales, and last autumn, Storent joined very good experts of sales team of rental industry, and this year the Estonian team is doing really good job by increasing significantly the sales. The Lithuanian entity with 7 rental depots generates around 23% of total sales. So this year we open an additional rental depot in Vilnius. So Sweden is the smallest our subsidiary with one rental depot in near Stockholm, generating 7% sales, and they are specialized in telescopic handlers. But Finland is around 20%, so 1/5 of our sales, and they have 3 rental depots, and they are specialized in access equipment and truck-mounted cranes. So as Andrus mentioned, the market is good in the Baltic countries. So we see, according to Forecon, which is a leading market research company, the last year increase in the Baltic countries was 3%. This year it is forecasted the same 3%, but next year more significant growth, 6% in the Baltic, and in Latvia it was especially good forecast, around 11% growth during next year is forecasted. So the main sectors where it comes growth, of course, it's military field, also Rail Baltica project. We know that there is a lot of information about how this project is organized, but of course the works are happening, and it gives additional income to construction industry and especially for equipment rental industry. Of course, the wind and solar energy parks is also growing the segment, and it will grow in upcoming years. And also general construction and business parks and additional industry where we are very strong is the event industry with our generators. So to sum up about the Baltics, so although the residential sector is still not growing, and there is not expected huge increase, but other sectors compensate that, and the increase is expected. Another story is about the Nordic countries. So last year it was decreased 1%, and this year is estimated decrease 10%, and that we see also in our subsidiary results. So there is we hear from the market that now they are in the lowest point, and coming to the year end it will start slowly recover. But in 2024, the growth is forecasted to 6%. The main projects where it's developing, it's the industrial project, also projects related to energy industry, especially the northern part of Finland and Sweden is developing a lot. So also residential sector will slowly start to recover from the very big large decrease. So taking into account this market forecast and knowing that Storent wants to grow, we did significant investments during this year. So far, in 6 months, we invested 15.5 million, and the biggest investments were in aerial lifts working platform, so 5%, one third of that went to access equipment, a very significant, important product group which is growing as telescopic handlers. We know it more by brand Manitou, which is leading brand in this product group. So this is growing significantly in the Baltic and also in the Nordic countries. Also earth moving equipment, which is quite much related also to Rail Baltica project. Also grout tightening and compaction equipment, also generators, as I mentioned, for the event industry, and many other products since we are general rental company. So our product range is very wide and made for different industries.
I would like to add here that it looks like a significant amount of investments we already made, 15.5 million, and should be reflected in our sales. But it's not so, we didn't have so significant growth of our sales. We had only 3% in the first half of first 6 months. But this is because we start to receive these new investments only from the May, June, something very small amount in April. And actually, usually it takes us approximately 4 to 8 weeks to register it, to get financing for this equipment, and to move it in some specific region or outlets. And sometimes we are renting we have for equipment first customers in 8 weeks, not earlier. And that's why these investments which we are making this year, 15.5 million, we have received this equipment at the end of June. At the end of October, we will receive almost all planned our investments, which Baiba will show later, 25 million. But it's not possible to get immediately these results in our sales, because it takes time for us to get this equipment and to move it to specific depot and to rent it to the customers. And actually, what we are working today, it's to make these investments project very smoothly when we investing all the time. Not just like, okay, we are putting significant amount, we try to order everything, and actually getting this equipment in the mid of season, sometimes at the end of season. That's why it's not possible to get results on these investments immediately. And you should understand one thing, that these investments significantly increase our debt, but we cannot it's not reflected in EBITDA, because we still need to, I don't know, some 12 months to get appropriate income to get this payback, which we expecting approximately between around 30% from this equipment. We need at least 1 year to reflect fully these investments which we are making this year. And actually expecting good results, good market situation next year. We should make it already this year significant investments, and to have at the beginning of next season this equipment already in place in a specific region to rent to our customers. And this is very important for our future development of the company. Next year, we have also a significant amount of investments money. It should be, I think, between 15 to 25 million, depends on situations, but we will try to get already this equipment in March, April, May, That's why we're also asking this debt-EBITDA ratio in the first 2 quarters next year on a level of 4. Because we want to get this equipment before the season, not on, let's say, in the mid of season like this year or at the end of season. And now, starting from July, Baiba will show later, these investments already reflecting, we see results of these investments already in our rental income from own equipment.
Yes, so as Andrus mentioned, we are continuing with our investments. So this year's total investment will be 25 million euros. So the biggest group in the year's total investment will be telescopic handlers, earth-moving equipment, aerial lifts, and then other groups. So that the main thing is that telescopic handlers is something what is very high demand in the market, and actually it increased the efficiency of the construction company, so they can lift higher and more heavy items, and it helps in construction a lot. So here we can see the Storent's fleet investments and the total amount of fleet, found fleet, what we operate. So in general, we can see that starting 2019, our fleet was 100 million, but then it decreased slowly because the company were on the possible sell process, and we didn't invest anything new. So by the end of 2022, our fleet decreased to 91 million. And when the ownership change happened in December 2022, we started to invest more. So last year we did investments 14 million and sold some older equipment. And this year our total investments will be 25. We will also sell some older equipment. And at the year end, we expect our fleet to be 120 million. So increase in fleet also will bring the increase in sales, but it doesn't happen immediately. It happens step by step.
Yes, you can see the difference between our investments and actually value at the end of this year. This is the amount which we will sell in acquisition value. Actually, approximately for 4 million in acquisition value, equipment, original acquisition value, we will sell. Of course, this is already old equipment which we cannot rent to customers. This is equipment which 10 years or older and with very bad technical conditions, which we cannot anymore to rent our customers. Actually, we need to some part of our investments going to renew our fleet, not on increasing of the fleet. But you can see from these graphs that this year 25 million, this is the biggest investments in Storent history. And actually, taking in account that 3 years we didn't invest anything, but at least we had to invest 10 millions every year. We have some gap for 3 years, around 30 millions, which we didn't do in these years, because we need to invest at least on the amount of our depreciations every year.
And of course, the operating with the new equipment, it also gives competitive advantage to our sales team to rent out the new equipment. But if we look from the profitability side, it's very healthy to mix the new equipment with older equipment, because then the payback of older equipment is we don't have any large costs, so we have paid leasings and they are almost depreciated, so the income comes on top. So here are our monthly revenue this year compared to last year, and we included also July. And here is what Andrus already explained, that actually the income from new equipment comes a little bit later. So we can see in the first half year, our own equipment rent grew by 3%. in 6 months, but in July we can see that already increase compared to last year is 26%. So new equipment started to work and generating rent income. And the lower graph shows the split rent equipment rent. So we see that in the first half it grew by 21%. This means that there is market potential, but we didn't invest soon enough. And then in July we can see that split rent is increase of split rent equipment is decreasing only 6%. This means that we actually replacing split rent equipment with our own equipment, which gives a totally different gross margin. Of course, we can earn much more on the own equipment than the split rent equipment. Usually split rent equipment, we work with the split income principle. So 70% of rent income goes to equipment owners, and Storent is having 30% of the income.
Here I would like to give you one example. For example, in Sweden, we re-rented 6 Manitou 26 meters, and actually we invested in our own equipment, and now we had significantly higher results, approximately 40% growth on own equipment in Sweden, because we just replaced some split rent equipment, it was a third-party equipment with our own equipment, but it gives significant profitability for significantly increase our profitability, because you should understand that on a split rent we can get profit only 25%. For example, if we are renting for, I don't know, for 100 euros some equipment, our profit EBITDA could be something, EBITDA could be 25%, actually 25 euros. If we are, let's say, having our own equipment, all 100 euros reflected in our EBITDA, difference 4 times. If we are re-renting, we can get profit, but it's approximately 4 times less in average than we are getting from our own equipment on EBITDA level. And here you can see our, let's say, situations in by country. As Baiba said already, in Estonia we have very good team. As I said, our main asset, this is our people. I would like, using this possibility, I would like to say, if they will look this presentation, thank you of all Storent employees. They are doing great job. This half a year we really had a difficult year because of also implementing new ERP systems. But yes, in Estonia we have very good team, and we almost doubled our results in July. In Latvia we have growth 18%. Of course, we have higher results. We are leader market, but and growing it's more difficult. But the results and these estimations which we had for July, very good. In Lithuania we also growing, and in Finland we had 14% growth. In Sweden, I said we have 42% growth for own equipment, mainly changing equipment which does not belong to Storent, to Storent equipment, our own equipment. And also in Estonia and Sweden we have new CEO which start to work from May, and we will have new sales director who will start to work from September. We are very happy these 2 guys joined to our company, because they are very good professionals. They had very good, they've been working before in Hilti, and Hilti known with very good sales team and sales approaches. All people which we had previously historically from Hilti. They are very, very good employees and giving significant improvement in our results. Of course, as I said before, thank you, our people, as this is our main assets. We can invest a lot, but without this excellent team, which we have in place, real experts in rental business, some of them working almost 25 years already in rental business. We have very, very good results, and yes, we are improving situation significantly. I would like to explain also one thing which is very important to understand, because maybe if we didn't do this, we had a little bit higher growth in our rental income, but we would like to explain you, as I said to you at the beginning, we try to be open and transparent. Because of change our let's say all our systems, we have changed all our back office systems for rental operations, our financial systems, in business intelligence tools. We are changing almost 90% of our systems in this year. And of course, it's changing of systems. It's always challenging. We had and still have some problems. Thanks to our employee again, they're helping to improve the systems. Thank you, the company who is making these systems, because it's specially, let's say, created for the Storent. And we needed to do this because we cannot grow, we cannot significantly grow using old systems. We had some possibility, we had limited possibility to grow with old systems because of just technical, let's say, things, because this is systems which built on old technologies. And now we have very advanced systems. Still, we are improving these systems. Still, we are investing in these systems. But we will finish at the end of this year, and probably this year, this system doesn't bring us significant increase of efficiency. I would say it gives a lot of additional works to our employees, but we believe that starting from next year, we will have significant increase of efficiency, and also we will try to push further our, let's say, online sales and our things, our competitive advantage, which we actually using in our operations.
And another thing where invested energy and also money is, of course, our team. So in the first half year, our personal expenses increased by 18%. This is due to like general inflation and increase in the market for salaries. But another direction where we are working to create the culture of high performance. So when Storent started, we started active sales, and nobody of our competitors did this. Nowadays, most of them do. So we like to invent new things and implement them in life. So one of the examples is that our sales team's salary system, motivation system, where actually the salary level depends on their performance. So this is Storent DNA, and we always aim to reach better results, not only in the sales, also in the quality wise. But so we introduced the system where we very honest first system and transparent system, where our sales salary depends on their performance, and that we will implement also in other departments. So we like to attract the talents to our company and make the rental industry better, more convenient for customers, and increase our own efficiency. by decreasing different kind of manual works. So this is another direction where we work, and it's important for us that people like to work in Storent and they get the highest salaries in the industry. So, but coming back to the numbers, the first half year results, as you see on the right side, the sales were the same level as last year. So the rentals decreased, but other incomes decreased. We didn't sell so much the old equipment, and a little bit decreased the service income. EBITDA decreased. Last year it was 5.8, this year 4.4, and here in next slide we can see the total profit dynamics. So the how it is compared to the first half year of last year. So gross profit was little decrease. It's mainly due to the split rent equipment. Then personnel expenses increased by almost million, 0.75. Another item is other operating expenses. That includes facilities, our warehouses, where are our depots. Also, bad debts increased.
We opened some new outlets,
Yeah.
also it's also, you can see here this.
Also, we use more marketing, especially digital marketing, and of course the new investments also increase the depreciation. And the biggest item of the expense increase is the interest income, which is related to the bonds, which we showed last year and this year also in March. So the interest rate is quite high. It's 10 and 11%, and some additional costs. So our half year result is the loss is 1.2 million. But if we look at the second part of the year, our industry has seasonality. So the third quarter will bring definitely losses to cover will bring profit to cover the losses, and we plan to full year results with around 2 million profit.
I would like to add that EBITDA will be, I think, better than in 2023. Net results will be worse because of mainly interest expenses and depreciations, which will be significantly higher. But in general, I said we are happy taking into account all things what we are doing. We are happy where are we going actually, and with the results.
And here's the equity development. So we did share capital increase, and at the same amount reduced the reserves. So the total losses of 1.7 million in the first half year. Additionally, there was the dividend payment for the owners, so that influence also the income tax. And dividends paid almost 4 million, and that was not for spending, that was to cover the debt for previous owners, because Storent assets were pledged for the previous owner until this payment is done. So for us, it was important to free our assets and close the old story and to continue to work on the development. So equity at the end of June is 60 million. So here I want to a little bit explain about the benchmarks in the rental industry. So rental industry is very capital intense. So you need to buy very expensive machines, and then the income comes in the many years. So for the small equipment, it can be 1 or 2 years, but for the larger items, it can be 3, 4, 5, even maybe 5 years. So that's why the covenant for rental industry net debt EBITDA is around 4. So our covenant for our bondholders was 2.5, which was very conservative. If we look at our competitors, Loxam, who is owning the Ramirent and Boyles, who is owning the Cramo, it's much higher, 4.7 and 3.5. So actually our current net debt ratio, EBITDA ratio 3.77 is actually a very good number compared to our competitors who are also growing, investing
buying in other companies. Also.
Yes. But if we look at another ratio, which is shareholders' equity, we see that our competitors actually this is very small compared to Storent, where we were. Now we have 51%, and last December we were 63%. So what I want to say that that's very normal when company invests and is aimed to grow, that the net debt EBITDA covenant is growing, and then when the investments are more stable, like replacement investments, then it can be closer to 3. So yes, that's why we also invite you to participate in the voting where we want to change our covenant. So right now we have 2.5, but at the end of Q2 we already exceeded it, and we invite you to vote for covenant 4 until next year end of June. And then we commit to reduce it to 3.5 when we will get already incomes from this huge amount of investments what we made. So we estimate that our net debt EBITDA at the year end will be 3.9, and no, at Q2, and by the year end it will be 3.5. So we will already get this effect on the new investments on our EBITDA. So we still need to invest these 10 millions. So
we're investing already additional 10 millions in July coming already equipment, in August it's coming, and we will finish investments approximately in October. We will invest around 25 millions. And next year we would like to start investments also earlier, not waiting for May, June, but we would like to receive already equipment in February, March, April, to move this, to finance this equipment, to move this equipment to a specific region, to be prepared for the season to rent to the customers. That's why we would like to keep these 4 still for the first quarter, for 2 quarters of next year, and after that these investments will be reflected already in our EBITDA. And our debt EBITDA ratio will decrease. Yes, for us it's very important that our investors, bondholders will support our strategy, will support our visions of development of the company. And we see today the opportunity for next year have significant improvements in sales and also in net in EBITDA, in net profit, and we will but for that we need to invest already today and increase our liability already today, but it will reflect it in our sales next year. Of course, we are paying almost every month, we are paying our liabilities, we are paying to our banks, leasing companies, our payments. That's why we're investing around 10 millions, but it's not increasing on 10 millions our liability. It will increase only on a couple of millions in comparison with second quarter results. If I remember correctly, it was 47 and 50 will be our plans at the end, 51 at the end of this year, because we are paying back some leasing payments during this half a year. And of course, we have down payments for equipment. We didn't have 100% financing.
Yes, and another covenant, the equity ratio is in very good level, so around 50%, and we plan to leave it at that level. So the minimum, according to terms and conditions, is 35%. Another graph shows actually the structure of our liabilities. So at the end of June, our debt was 47 million. So 25 of this is bonds and 90% is the leasing and producers financing, and three bonds is other financing. But our asset fair value is 89 million, and from that the leasing assets are 35 million. So our assets in the volume of 54 million are free, and they are like a security for unsecured debt.
Yeah, this is security for bondholders. This is our fleet on the amount of 54 millions, which belongs to Storent, and it's not to pledge to anybody, not to pledge to any bank, not to pledge to any persons. Yes, we had at the before June, we had pledge for 15 millions to our previous partner, Andris Bisnieks, but now we paid everything, and actually we didn't have any pledge on our assets at this point of time. And this is, let's say, I think, security for all our bondholders. And before we will explain about the voting process. Before we'll explain the voting process, I would like to make some conclusions very shortly. We investing into actually 2024. It's a very difficult year for Storent in terms of things which we are changing. We're changing a lot of things today. We try to be prepared. We are, let's say, changing culture of our company. We are investing a lot in our people, and this is our main assets. And this is, if you can see the results, I don't know, in for example, Estonia, when we have very good team in place, we can even double our sales in very short period of time. And we investing in new salary systems, motivation systems. We investing in, let's say, in educations of our team. And this is very important for us. We have changed all IT systems. It's very difficult process. I believe everybody who had made something like this before understands this is very challenging process, and of course it took some time, and it's not going always as expected and so smoothly, and we had some problems, but we let's say we solved them, and we are going further. And then, as I said to you, we believe at the end of this year, beginning of next year, we will get significant improvements in our efficiency using these systems. We have a lot of new idea which we will use to help our customers to rent the equipment even more convenient than we have today in place. And third thing, it's we investing equipment. Yes, with all the equipment which is not possible to rent, which is often broken on a job sites, we cannot compete with our main competitors. And of course, we need to have at least 50% of our fleet, a new fleet, not older than 3 years. And for us, it's significant point to invest in a fleet. Last year we did 14 million. This year we want to do 25 millions. I think next year it will be between 15 to 25, depends on situation on the market. But if everything will go according the plan, it will be the same 25 millions. And we would like to say thanks to all bondholders which invested in our bonds. Without your bonds, we couldn't make all these changes. And for us, it's very important, this bonds money. And of course, we will be very happy if a majority of bondholders will vote for changing of our covenants, because we need to increase our fleet. But how you understand already, I believe, fleet increasing today, liabilities increasing today, but to reflect this in our sales, we need some time, at least 1 year. This is shortly about our presentation. Baiba will explain a little bit more about the voting process. And we will try to organize these webinars at least every half a year to explain situations in a company, to inform our bondholders. And this is our also changing in our culture. It's from one side, it's difficult to be open because also competitors can see all our figures, all our results. But we think these benefits which we are getting to explain situation to our bondholders, to our investors, it's much higher than let's say possibilities that our competitors could see some figures. We actually know where to go. We know what to do exactly, and actually we just need your support. And we need your voting for changing of our covenant net debt to EBITDA.
Yeah, so public voting is valid for 10 working days from 16th of August to 29th of August. So it's happening right now. All information you can read on our investor webpage, storentholding.com, or by scanning this QR code. Noteholders will benefit from the voting if your vote will be positive. So if you vote yes for changing the covenant, so we pay additionally 1% from the principal amount for the positive vote. So changes are to change the one covenant, net debt to EBITDA. For next 4 quarters, it will be proposed to have 4, and then starting the 3rd quarter of next year, it will be 3.5, which is according to the industry benchmark. So now I will show you short.
I would like to add to understand about these benchmarks. This 3.5, it's actually lowest benchmark in our industry. In some companies which are growing very significantly, this debt EBITDA ratio, it's around 6. 5, it's very typical for a lot of rental companies. That's why 3.5, it's very conservative.
Yes, and we try to be also modern and up-to-date relating to voting. So we created the digital voting possibility. And right now will be short video how to do voting manually and digitally.
Yeah, this is for us also very important to show our investors, bondholders, that we are very innovative company, and also this voting we are try to organize very efficiently, that our investors, bondholder, will not need to spend a lot of time. Actually, it's just couple of clicks, and you can vote for changes. Thank you.
You are watching Storent voting instruction. You have 2 voting options. If you choose vote manually, click on the link to download the form in language you prefer. Fill it up, sign digitally or print out and sign, and send it to us via our email investorrelations@storent.com or via mail. If you choose to vote digitally, forms will be filled in automatically. First, choose your country to confirm identity. In this instruction, I will choose Latvia. I will use the Smart ID identification method. Confirm your identity and enter the digital voting form. In this form, you can choose between a legal entity or private individual. I will demonstrate the private individuals form. Fill out all the fields required. Don't forget to fill in the value of Storent notes you have in euros. If you have one of the notes, mark the other ones as 0. Then choose whether you vote yes or no. If you vote yes now, after the amendments are approved, you will receive additional payment of 1% from the principal amount of the notes. It is calculated below. To vote, press the Submit button. The filled out form will open. Check it thoroughly. If everything is okay, press the Sign button at the top right corner and sign the document via digital signature you have. Now your vote is received and accepted. Thank you. No further actions are required. You can download the copy of the document right away. After a few minutes, you will receive your copy via email with the voting result and attachment. If you have further questions, contact us right away. Thank you. You are watching.
So that's from our side all. I
Yes.
hope there are questions and we are ready to answer them.
Thank you for the presentation. Now let's proceed with the Q&A session. And a reminder to attendees that to submit your questions to the company, please use the Q&A window below. So the first question we have received, what amount of additional debt is planned in 2024 to make indicated significant investments? Will it be bonds?
So no, it will not be bonds. We finance the rest of our equipment through the leasing. So we plan to increase debt by a few millions by the end of this year. So the additional investment will need some around 7-8 million the debt, but on the same time, each month we are repaying existing debts. So it will be 50 million plus a little bit more. Yeah.
51 million.
Thank you. And the last question we have currently received is when the note holders voting will take the place.
So yes, that was already partly answered, but as a reminder, so voting takes place from 16 to 29 August. So it will end not next Thursday. And yes, and votes can be submitted manually or digitally.
Yes, I would like to add that it is very important that everybody will vote for our changes in our covenants. We would like, we need to get quorum at least 50% plus one vote to have this. And 75% of this quorum should vote yes to make these changes in our terms and conditions of bonds. Yes, for us it's very important to further have a significant growth of our results, profitability, and to further develop our companies.
Thank you, Andrei and Baiba. All questions are now answered. The recording of the webinar will be soon available online. Please follow Storent announcements to stay up to date with company news. And thank you for joining today.
Thank you.
Thank you.
Thank you very much.